The dark cloud cover is a 2-candle pattern occurring at market tops only, so it's a bearish reversal pattern. The price action leading up to a dark cloud cover must be an uptrend. Ignore the pattern in a sideways trend or a downtrend. Price must be trending upwards. The first candle has a green real body continuing the trend in the upwards direction. And the second candle is a red candle opening above the real body of the first candle. So price in the green candle closes here and then gaps up to open at a higher price here. And it's even better if the open gaps up above the high point or above the tip of this shadow here of the first green candle. And the second candle, the red candle, then closes down below the midway point of the green candle, as shown on this diagram here. The 50% line marks the midpoint between the open and the close of the green candle, and the red candle must close below that point. Confirmation of the pattern is price trading below the low of the red candle here. As always, more conservative traders may seek additional confirmation through price closing below the low of the red candle, or even closing below the low of the green candle here. Whatever works for you in your back and forward testing is fine. Remember though that confirmation does not guarantee a reversal of trend and commencement of downtrend, so always set your stops. Sometimes it may change to a downward trend. Other times it may just enter a period of sideways congestion, and sometimes the pattern fails, so always set your stops. Let's consider the psychology of the dark cloud cover. Who is in control, the bulls or the bears? Well, the name gives a good hint. What comes from dark clouds? Rain. And what does rain do? It falls. Anyway, let's consider the psychology or the sentiment. The first candle continues the uptrend. Everything is looking bullish. The second candle ideally gaps up at the open. Not essential and not possible in some markets, such as perhaps intraday forex, but if it does, the bullish trend appears to be continuing. However, price is at an area that now shows a change in the balance of bulls and bears. Bulls are no longer willing to enter the market at these high prices, at least not with the dominance they showed before. In fact, some of them may be taking profits and exiting. The bears find these prices attractive and enter the market in more force. The balance of supply and demand has been tipped slightly more in favour of the bears, and price falls. The key to this pattern is the extension of the down move below the 50% level here. This is considered the balance point for bullish and bearish sentiment in the first green candle. The bears were able to push the price back down below this central balance point and close price in this lower area. This will shake the confidence of a number of the bulls, leading them to exit their positions if the pattern is confirmed down here. And it will strengthen the confidence of a number of bears who will enter on achieving confirmation in that same point here, or here depending on your testing, helping to continue the bearish move downwards. If you recall back to an earlier video, we discussed the process of candle addition, where we combine the price movement of a number of candles into one single candle. So for example, if these two candles making up the dark cloud cover were 5-minute candles, we'd be combining them to see how a single 10-minute candle would look if it represented the same price action. If they were daily candles, we'd be adding them to produce a single 2-day candle. For the discussion, let's assume they're 5-minute candles. The dark cloud cover here is made up of 5 minutes of price action, which opened here at the open for the green candle, moved to lows here, up to highs here, and closing here, followed by a second 5-minute period of price action that gapped up to open here, moved up to the high, to the low, and closed at this point here, at the base of the red candle real body. This same 10-minute period of price action would display as a single candle opening here, equal to the open on the green candle real body here, moving to the low, equal to the low of the dark cloud cover over here, moving to the high, which equals the high on the dark cloud cover here, and closing here at a point, once again, equal to the close of the red candle on the dark cloud cover here. What does this single candle represent? Remember, it occurs at the top of an uptrend. So a dark cloud cover, through the process of candle addition, becomes a green shooting star. Once again, a bearish reversal pattern. So if you're looking at any price action and you're unsure of who's in control, the bulls or bears, use the process of candle addition to resolve the group of candles into a single candle and see if that provides you with any insight. The process of candle addition is powerful. Be sure to practice it on your charts. Let's look at a few examples. Dollar yen 4-hour chart. An uptrend that stalls at the 105.50 level here. See the three upper shadows rejecting higher prices here. Then a retest, ending with a great dark cloud cover. Price on the red candle closing just 1 pip above the green candle open. Confirmation through price trading below the pattern leads to a great downtrend. Personally, I love these candle patterns when they occur at a retest of an area that showed previous rejection. British pound, US dollar, 5-minute chart. An uptrend accelerating right into a dark cloud cover. The red candle closing just below the 50% level. Price trades lower to confirm the pattern. Here. We then get a retest as the bulls give one last fight back before rolling over and dying as price commences a new downtrend. Interestingly, the dark cloud cover is accompanied by a second and stronger reversal pattern at the retest, one which we'll talk about in an upcoming video. And the third example, Euro US dollar daily chart. What I want to do here is dampen your enthusiasm a little. This isn't a holy grail never fail system, so I want to show you an example where the dark cloud cover has failed. We have an uptrend leading to a dark cloud cover here on the 21st and 22nd of March with confirmation on the 23rd here where price trades below the low of the red candle here. Price does not reverse but rather just pauses and travels sideways for approximately 2 weeks before then continuing the march upwards. Depending on your trading plan, there's certainly opportunity to get out at break even or a slight loss upon recognizing the failure of supply to overcome demand in this area of congestion.